So in today's video I will show you exactly how I would start all over in trading, and it might surprise you because it's unlike anything you've heard before. So basically what you need to do when you first start out trading is you have to gather experience, which you will get by spending a lot of time in the markets and seeing how the market develops on a day-to-day basis. So basically all price does is go up or go down. We do not have to overcomplicate it. We could add 50 indicators, but in my opinion, everything you add to your approach is just unnecessary noise. And the only thing that basically matters is if you are applying your own experience you gathered over the last few years in order to make very clear trading decisions and keeping your emotional state under control. Which is why I only trade on the higher time frames, because it allows me to have a lot of time to make my decisions. So in this current trade I'm in, basically what I did was I took a look at the chart on Friday and decided that I think that there is a high chance of price moving lower and retesting these lows. So all I did was enter a short position, and my confidence on this trade wasn't that high, so I only risked about 50 euro. So if price would hit my stop loss, I would lose 50 euro. And if I have a high conviction on a trade, I will be risking up to 100 euro. And again, all I did was ask myself if I think that price is more likely to go down, more likely to go up. And in this case, I thought price was more likely to go down. And this decision was made purely by my experience and intuition. Anything you can draw in TradingView, anything you can apply, and there are a lot of crazy things in TradingView. For example, this right here. How on earth is this supposed to help you? You can't even see the candles. This is a perfect example for way too much noise, which makes your decisions even more unclear. And trading is hard enough. So basically what I'm saying is reduce trading to the bare minimum and get enough experience so you trust in yourself that you will make the right decisions, have confidence in your judgment, and then execute a trade and manage the position accordingly. That's another very important point. If you have entered a position, this is only half of the work you have to do every day. The other half is managing the position so that you can get out of losing trades early. For example, in this trade I am in right now, you can see that we did not get the drop to the downside I wanted or I was looking for. We instead just went straight up and are currently around halfway to the stop loss. So now I have a very important question to answer this evening, and that's whether I will be holding this trade and risking getting stopped out. I might be closing the hold position halfway to the stop loss, so I will lose around 25 euro. Or I could only close half of the position and let the other half run, but I will not do anything right now. I will be waiting for the daily candle to develop even more, and at the end of the day I will be looking to make a decision. And this helped me out a lot to only make decisions once a day. This way you will not over manage positions, which I currently still do. So you need to find the perfect balance between letting the trades play out and run and managing them accordingly. So closing half of the position or closing the whole position. And sometimes you make wrong decisions, or I should say most of the time you will make false decisions. But as long as you lose a little bit less than what you make on your winners, so you have to hold your winning trades a little bit longer than the losing trades, then you will make a little bit of profit in the long run. So if I had to start over trading, I would just simply look at the chart, and obviously at the start you have no experience, so I will suggest to you that you just enter trades randomly and watch them play out. And as you do this for 1 year, 2 years, or 3 years, as I've been doing it, then you will develop enough experience to make justified trading decisions or trade management decisions. So simply by skipping the strategy hopping phase everyone goes through at the start. And another thing I quickly want to mention is that I only trade 1-to-1 risk reward ratios, because as I said, I do not want to overcomplicate trading because it's hard enough. And if you have, for example, a 1-to-5 risk reward ratio and target something way lower, you will be losing way more trades, which makes it even more difficult to believe in yourself and make rational trade management decisions because you will be losing so many trades. And by only using a 1-to-1 risk reward, you just make everything so clear and simple. If you would flip a coin, price 50% of the time would go to your stop loss and 50% of the time would go to your profit target. Obviously, if you deduct commissions, swap fees, spreads, you will be losing money in the long run. But trading this way makes it so much more clear. Every decision you will make will be a lot easier, and you will learn to trust in yourself and in your approach, in your experience. And trusting in yourself is probably the most important thing when it comes to this approach. So I hope this video helped you out a little bit. Feel free to ask any questions in the comment section below and I will be answering them. But for now, that's it for this video. I wish you all the best in your own trading journey and see you guys in the next video.